I don't know what the upper limit is for silver. I think we see some triple digits for sure, but how far up into the triple digits is anybody's guess. And the only conclusion that you can come to is that you need to own some silver. Retail people that I know are stacking. They're buying silver because silver, even though the gold to silver ratio has gone down lately. In other words, silver has risen relative to gold. Even though that's gotten closer to a reasonable level, silver still seems really cheap compared to gold. The numbers that are being tossed around right now is that each electric car using those new solid state batteries will need a kilo of silver. And so something like that makes everything else irrelevant, and it certainly doesn't rely on individual investors buying silver to make silver go up in price.
In a recent discussion, John Rubino, well known for his analysis of precious metals and macro trends, highlighted why silver could be entering a powerful new phase. According to Rubino, triple-digit silver prices are no longer unthinkable, even if the exact ceiling remains uncertain. Retail investors are steadily stacking silver, and despite the gold-to-silver ratio narrowing, silver still appears historically cheap relative to gold. A major catalyst is industrial demand. Estimates suggest that each electric vehicle using next-generation solid-state batteries could require up to a kilogram of silver. If this demand materializes, investor sentiment becomes secondary. Industrial necessity alone could drive silver prices sharply higher, making silver one of the most compelling commodities to watch in the coming years. Now, we present the clips from John Rubino's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
Retail people that I know are stacking. They're buying silver because silver, even though the gold to silver ratio has gone down lately. In other words, silver has risen relative to gold. Even though that's gotten closer to a reasonable level, silver still seems really cheap compared to gold. So yeah, you can pay, well, $75 an ounce. It's hard to even say that for an ounce of gold right now. And you can get, or an ounce of silver, sorry, and you can get quite a few ounces of silver for the price of an ounce of gold. And, aesthetically speaking, that big pile of silver is just a lot prettier than that single gold coin. And so I think a lot of people are still doing that to the extent that they're buying at all. With silver, you've got the dual story of industrial metal and monetary metal. So as gold goes up, that naturally pulls silver up, so it can stay somewhere in the historical range of the gold silver ratio. But there's also all these new people coming into the market with solar panel makers buying huge amounts of silver all of a sudden. They weren't buying much of anything 5 years ago, and now they're the biggest single demander of silver. And now there are new solid state batteries coming along for electric cars that are much, much better. So we're told. They charge in no time at all. They go 600 miles, and they use silver. And they use quite a bit of silver. So if they actually turn out to work, and Samsung, for instance, has scheduled the beginning of mass production for 2027, so it's not that far out. But if they become a thing, if that's the new way to power an electric car, then there's no silver left for anybody else. It's gonna that sector alone will pick up all the available extra silver that's sitting in warehouses right now. And so then we've got somebody else who's a buyer and who's not price sensitive because they have to do what they have to do. You gotta, if you're Tesla, you got to produce 1 million cars. And if silver is a crucial part of the batteries that go in those cars, well, you're going to pay whatever you have to pay to get those cars out the door. And, it's like that for all the car makers out there. That's a gigantic market. And the numbers that are being tossed around right now is that each electric car using those new solid state batteries will need a kilo of silver. And so something like that makes everything else irrelevant, and it certainly doesn't rely on individual investors buying silver to make silver go up in price. As people lose faith in the currency, then they start moving their money into real assets that governments can't inflate away. That spikes the price of those real assets, which is inflation. That's the dollar falling in value versus gold and silver and oil, on and on and on. And then you get an inflationary crisis, which can lead to basically the end of that currency as a functional storage of value. And I think we're headed for, well, I mean, we're clearly headed for something like that, but I think that could be the beginning of it could be a 2026 story. So it could be that the inevitable is becoming imminent in the not too distant future. We'll have to see. But, we're at the point now with government debt loads and the interest on that debt having become unmanageable that there aren't a lot of ways out of this. So we'll have to see.
Silver continues to attract attention as retail investors stack ounces, drawn by its affordability compared to gold and its long history as both a monetary and industrial metal. Even after the gold-to-silver ratio narrowed, silver still looks undervalued, allowing buyers to acquire many ounces for the price of a single gold coin. Beyond aesthetics and accessibility, fundamentals are shifting fast. Solar panel manufacturers have become the largest source of silver demand, and upcoming solid-state batteries for electric vehicles could dramatically change the market. Estimates suggest each EV may require a kilogram of silver. If mass production begins as planned, industrial demand, not investors, could drive prices sharply higher, especially amid growing currency and debt concerns. Let's get back to the interview.
Gold has been going up steadily. Like, we haven't had a big crash in the gold price, which, it blew through to $2,000 an ounce US. Then it blew through $3,000 an ounce, consolidated a little bit there, blew through $4,000 an ounce, consolidated just a little bit, but not noticeably, really. And now we're halfway to $5,000 an ounce. And the reason for that is that these big whales out there that have printing presses that can generate as much new money as they need to are not done accumulating yet. Now, and by the way, China, it was announced, just bought $1 billion worth of gold off of Russia, which is a really interesting trade too. But it's completely possible that if central banks as a group decide to stop buying, then gold gets its big correction. But until that time, that's an awful lot of money on the buy side. And so I don't know any individuals. I haven't talked to anybody who's actually out there buying gold eagles or anything right now, just because they got crazy expensive. The story of silver is just great, and over the next decade, it's going to be an awesome thing to own. But boy, it blew through a lot of levels where there should have been some resistance. There's a saying that in a bull market, the hardest thing is to be patient. In other words, don't just get out of something right away because you doubled your money. Here I have a story about that. A little digression here. A while back, and I can't even remember what the company's name. Oh no, it was Glamis. There was a little gold miner named Glamis Gold that I bought like $10,000 worth of back when, and it doubled. So I sold out. I thought it was a genius. And in the ensuing year, I watched that thing go from $1.50 a share to $50 a share. So all I had to do was go to the beach for a year, and I would have had a net worth in the top 5% of Americans. And that's kind of what might be the case with silver now. It's had a nice run, but the upside is so outrageous that you wouldn't want to get out of everything now. But I actually sold some silver just this week. I sold some ounces of silver in a gold money account in London, just to be on the safe side. When you're fully invested in something and it has a great run, there's no problem with taking a little bit of it off the table. But you don't want to take all of it off the table because, if you've spent a lot of time, like you and I have with silver, we've been watching this market forever and we've made our bets and everything. And the last thing you want is to get out prematurely and then miss that big parabolic run. That kind of means all your time over the past decade was wasted, right? Because you didn't stay for the finale. And so that's the tricky thing now with something like silver is obviously you don't want to be round tripped. And a round trip to say 30-ish is completely possible if we have that recession and equities bear market and they throw all the babies out with the bathwater and gold and silver are among the babies and they tank. That's a completely believable scenario. And you really don't want to be. I mean, if you have to ride it all the way down and then ride it all the way back up, you still end up being fine, but it's emotionally exhausting. It's horrifying to be round tripped in a big position. So that's the tricky thing now. How do you structure your money and your investments so that you're reasonably protected from a V bottom crash, which we could easily see, but you're still exposed to something like silver for the long haul. And there's no one right answer. You take a little bit off the table so you have some cash. So in case there's that V bottom crash sometime in the future, you're able to console yourself that, yeah, your existing silver went down.
Gold's steady climb past major price milestones reflects sustained central bank buying, not retail speculation. As long as monetary authorities keep accumulating, downside pressure remains limited. Silver, meanwhile, tells an even more compelling long-term story. Despite strong recent gains, its upside potential may still dwarf short-term pullbacks. History shows that exiting too early in a true bull market can be far more costly than enduring volatility. While recessions or market-wide sell-offs could trigger temporary declines, silver's structural drivers, monetary instability and industrial demand, remain intact. Smart investors balance caution and conviction, trimming selectively while maintaining exposure to a metal that may still be in the early stages of a historic move. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. Thanks for watching.